Well, hello there. Welcome, everybody. It's the midweek update. It's the 18th of May, another Wednesday, and we're moving quite quickly through these last couple of weeks because the markets are actually doing a little bit of what I expected them to do. And it's kind of funny, folks, because when the markets start to do things that are as predicted, at least individualized, they become actually easier to trade. Well, that's my 2 cents. Take responsibility for whatever you get from this class. You guys know the drill. Let's jump right into it. So the market's put in a decent bottom and a bounce back to resistance levels. Cool move on Thursday going into Friday. Darren and Core, I should say, talked a little bit about that. A little bit of a hesitation on Monday, and then a pop up Tuesday. But today is a vastly different story. What was really cool about that, it was volatile as we had the candlesticks gap up, finish up and then gap up and then trade again, so on and so forth. I made mention of it on Monday's post that it could have gone one more up. It looked like it stalled out. Very rarely are we seeing these beautiful 3 to 5 day bear rallies or bull pullbacks in the markets anymore. It's usually super volatile. It's oversold. It's reactionary, just like we saw over the last few days from Thursday to yesterday. Lots of gaps, volumes dropping off, just cover, and then here we are today with a pretty substantial move to the downside. So active market selling continues. It's really cool. One of the things that I'm super excited about is this next slide, folks, because every single trade that we looked at last week, save one, triggered bullish and bearish and are still doing very, very well. So active market selling continues. There is still money in some of the stronger outperforming stocks, and it's staying in there. A lot of defensive plays, so on and so forth. But I'm starting to see capital coming out of the markets. Now, what is it about? Is it about inflation? Is it about the oversold bounce? Is it some margin calls? It's probably a little bit of everything. However, we still have a super strong consumer. Take a look at the economic data. A big drop in manufacturing, folks. This was an expected positive move that flip-flopped all the way down, a negative move. Now, the manufacturing index itself, the Empire State Manufacturing Index, is not only orders, factory orders, but shipments. And they had a contraction in both of those. We've got a pipeline that's a little clogged. We've got orders that have been canceled. We've got people reluctant to create new orders because they know they can't get the products at a certain amount of time. So it's create this own snowball effect. It doesn't mean that people aren't spending money, and it was in that retail sales number, guys. It was a little off of expected of 1%. We'll get to it in a second. But the consumer is keeping us from this hard landing. You guys have heard of a soft landing. The Fed's goal is to try to get a soft landing. What that is the Fed's trying to raise interest rates to curb inflation fast enough without crushing the consumer. And so far, the consumer going out to restaurants, buying stuff, is not slowing down. So it's actually kind of a good thing overall as interest rates kind of plateau. And boy, it would be nice to see them even drop. However, let's get to what I thought was really cool. Here's our trade ideas. PM, XEL, Merck. On the bear side, the only one not on the bull from last time, folks, was ABC, and I think it had earnings. All four of our bears I still like from last week and moving forward. I just think you guys rule. Sorry, bias. All right, so let's get into some of these trades. So PM, talking about coming back up, confirmation of a bull pullback down around $100. Confirms aggressively, gets above that 105 level, just a little bit above the 106. We're talking about a diagonal spread, a vertical spread, in line, doing exactly what we want. And everybody loves a cigarette, right? That's a joke. Sorry, folks. It's just in the consumer defensive. It always has been. You'll find that the consumer defensive actually got smushed. We'll get to that in a minute. But it was the majority of Walmart and Target. They just really had some bad numbers and missed and bad projections. However, let's get going to our good trades here. Utilities was a sector that was outperforming. Looked pretty good. We talked about this getting back up to the 75 level. I even think I said, hey, if you want to wait for this to get up there, consolidate and break above the 76 level. There you go. Whether you traded it now or later, it's still really great. It looks awesome. Pretty excited about that one. Then our last one is Merck. Now, a lot of these drug makers, and I think Corey brought one up yesterday that he was talking about, that he actually likes it to the bear side. He himself admitted that he might have gotten out too early. However, I like the pattern he was looking at because it was a crossing 2050. It was below it. If you guys want to take a look at that, sorry I forget the ticker symbol. If you want to take a look at it, you can see and compare it to this. This is completely different. This is a beautiful ascending triangle pattern that confirmed above $90, and it's continued higher. We're talking about this maybe not only this last week, but maybe even a week before that. But it's doing awesome. Healthcare, it's been a leader. It's a defensive move, and it still continues to do so. Moving on to the bear side, folks, I don't have anything on, as far as the sideways. A lot of my sideways trades turned into bulls or bears. They really have. So I figured, hey, let's not muddle it. I'll just go straight up, straight bull, straight bear. We can make a decision on if indeed this is that awesome confirmation of a bear rally or if we're going to chip chop around. It's not going to make too big of a difference, especially when it comes to our approach. KNX, this came to us, right, last week, last week, rolling over about the 48 mark. It was below the moving averages. It was breaking that support around the 47.5. The majority of it looks beautiful today. However, even if you stayed into it from last week, you're good. It never really revisited the 50-day moving average, yet alone even come close to getting above resistance at 51, right? 50-51. So if you want a trade and you think you've missed it, you think these markets are going to continue lower, this is confirming as well today. Guess what it is? Transportation. We know we've got an issue when it comes to our supply chain. So Newmont breaks down after a base. Beautiful bear crossover with the 2050, I'd say early last week, as it rolled over. Well, actually, it was earlier than that, probably beginning of the month. But the confirmation of it breaking below 70 a couple weeks ago was awesome. It's down, it's basing. This didn't even attempt to bear rally. It's consolidating. It looks like it might sit there and roll over again. Now, gold itself didn't fare very well versus what oil did. So you're adding insult to injury here when it comes to Newmont. We talked about it last week, saying just because it trades a commodity, it doesn't mean that it's going to do well if the commodity as well. The last one is ETSY. Now, folks, we did have W in there, which is just kind of a low base. I thought this one looked a little bit better. Please check them both out, or check out W as well. This is Etsy. You might have had to sit through a little bit of a bull pullback for a couple of days. You could see that Thursday and Friday, just like the rest of the markets, but it didn't even touch its 20-day moving average. Discussion was a diagonal spread, something sideways to down, maybe even a credit spread below 100. And so far, folks, it's awesome. So great job Wednesday, guys. You're my favorites, right? So let's get into a market analysis, as it's pretty ominous out there. Good bounce. We expected the bounce. We got the bounce. I was running these numbers, and the diamonds, the SPY, and the Qs all had positive retracements from last week going into this week. However, today wiped out the majority of them. In fact, the Qs down 1.4%, the SPY and the diamonds to the negative side as well. The Russells is hanging in there. Oil had a substantial move, over 8% over the last week, and it's given up about just over, well, I don't know what, 1.5% there. And then gold is hanging in there pretty much flat. So charting wise, we have a beautiful bull pullback with confirmation to the downside today. What I love about it is we were discussing this and it happened. What I don't like about it is how it happened. It's volatile. You can see the gaps. We had a hesitation Monday, but then a follow through on Tuesday. We still didn't quite get to that resistance level. Corey talked about resistance levels are not a specific number, but a range in yesterday's update. And I agree 100%. Today, we gapped down and we're trading lower. Now, a couple things to go with this. Walmart, 2 days ago, kind of dropped the ball. I said before, in Target yesterday, just really missed. There's a lot of companies out there projecting lower, recalculating expectations for next quarter, blah, blah, blah. So there's a lot of bad news specific to companies. Now, there's some that are pretty optimistic, and we're seeing participation to the upside. But even with that participation to the upside, it's really not creating any sort of bullish opportunities today or after those announcements that we have been seeing in the outperforming stronger stocks and sectors over the last month. which is why I love to talk about our last week. Everything that was bullish is staying bullish. Everything that's bearish is staying bearish. So, yes, I believe this is a pretty ominous candlestick. Yes, I think it's a confirmation of a bear rally. However, I don't believe that it's going to be, I want it to be uniform. It could be uniform, but I could also see this gap back up to 410 tomorrow. It's probably going to have to come with earnings, not earnings, some sort of optimistic news, which I just don't see coming. Or this could be that last give up, capitulation, flush out, blow through the 390, blow through the 380 level that we've been looking for. So keep that in mind. Diamonds are pretty much the exact same candlestick. Confirmation, big candle down today. Today's not over, folks. We've seen what Wednesdays can do here and there. However, just the way that things are rolling based off of some of the numbers, housing has slowed. Housing starts are lower. New building permits are down. We do have new home sales or existing home sales tomorrow and some employment numbers. But we are seeing a little bit of a pullback when it comes to purchasing, which you'd expect when the interest rates literally double. Go from mid twos to high, or I should say low fives in the first interest rate rise. So, but once again, the consumer's still active, so we'll see if we can keep that pretty steady. Now the Qs looking pretty bad as well. Beautiful confirmation of that bear rally, a choppy bear rally to say the least. But what I want you guys to focus on is the overall support and resistance levels of the pivot point we sent Thursday and the one we are kind of setting yesterday, depending on the follow through. That way you don't have to worry about this choppiness. You don't have to worry about the uniform 3 to 5 days up and then a move to the downside, breaking support, so on and so forth. Stick to what's been working, and when things exceed support or resistance levels, then we can add. So just stay patient. That being said, couple of different, I love these first two. Empire State Manufacturing Index, down 11.6%. That is showing deterioration in both orders and shipments. That's significant. However, I don't think that would have changed regardless of the inflation problem. I really just think it's a bottleneck when it comes to shipments, and it's a labor issue when it comes to production. I truly believe that was going to play itself out. Retail sales, to me, folks, Corey and I, I've heard Corey go back and forth, and I talk about inflation. He's saying it looks like it's probably capped. That's his opinion. He thinks it's at its peak, and we're going to level off. When I see a retail sales number like this, I believe he's right. And what that is it's going to keep that quote-unquote soft landing intact. So we can sit high for a while because we're not going to just hit a peak and come directly down. We plateau. Interest rates and consumption have to just take this even teeter-totter plateau for a while. And what Powell was saying yesterday is we will feel pain. And he's not talking about the stock market. He's talking about people. He's talking about when you go to your job, when you go to work, when you buy groceries, when you buy gas. That's what he's talking about. That's the pain we're going to feel. The markets are already feeling pain because they're just getting sold into. That's the discussion. So when you see the retail sales number where the consumer's still active, it could create the idea of maybe a soft landing as long as we can sustain that. So industrial production index actually increased. Now that's going to be kind of a little bit more inward, a little bit more micro. Business inventories up. Building permits and housing starts. So building permits were in line with expectation, but they were lower than previous. And then housing starts, you could see, were slightly lower than where it was expected. Anyways, this we know, this was expected. I'm not going to look too ominous into that at all. Jobless claims, continuing claims, Philly Fed Manufacturing Index. I don't know if it's going to reflect what the Empire State Manufacturing Index did, but I do expect it to be a little bit more bearish. Those two are pretty close to each other. One's central located, the other's East Coast. Existing home sales will be interesting. And that's also going to be a little bit tapered off because existing home sales has an inventory issue. It's got a problem. There's not a lot of houses out there to get on a list to sell. So it's kind of a hard one compared to building permits and housing starts and then leading indicators moving into Thursday. Nothing on Friday. However, Powell's already talked about what he's seeing moving forward. I don't think the leading indicators is going to skew that too much. So, all right, let's pull the glass here. What are you guys thinking for the rest of this week and in moving into next week? Now, we have been expecting the bounce on Sunday, and we actually got it. We got it. We were expecting, Thursday, Friday, Monday, Tuesday, so on and so forth. We got Monday, Tuesday hesitated. Or excuse me, I got this backwards. Sorry, folks. Monday hesitated. Tuesday was a follow through, and now we're getting that pullback. So Sunday was pretty much right on. It just depends on how you want to look at it. And then moving into the last couple of days, I believed on Monday that we're still in a move to the upside with that doji, saying, hey, I could easily see this go up a little bit more, maybe up another day, and then roll over towards the end of the week. Turned out we got it the 2 days after that. So, what are you guys thinking? Got about 81% vote. Kind of leaning towards what I was thinking about. Let me read through some of the comments while you guys are taking this poll. Okay, cool. All right, so okay. All right, let's go ahead and close it as we stalled out at 81%. Looks like there's a lot of people without an opinion. Okay, so we are at a -1 to -2. Fair enough. Fair enough to say. And I am definitely in line with you guys on that. So I went out and decided, hey, let's talk about this. I'm at a -2. Why am I at a -2? Because I love the way that we had Walmart and Target back to back just come out and say we've got nothing. We've got less than nothing. The cost of the goods, the amount of money it takes for us to buy the goods and sell them to you, it's eating to our profit line. They're blaming inflation as well. There's no way we could keep up with the demand that we had with online orders over the last 2 years. And so these balloons are popping and deflating. And these are two monster companies. In fact, when we take a look at the consumer defensive, it's the main reason why it's down so much. I think that with some bad news and already momentum into selling, and what Coinbase did the other day, there's a lot of ominism out there. Pessimistic, fear, worries. Yeah, what if Coinbase did default? Who's going to bail out a made-up currency, right? Okay, all right, enough of that. But pattern-wise, nice confirmation. If we get this same candle with a volume bar to the upside, I can't do anything but be -2 for the rest of the week. Still sticking with my -3 regardless if we chop around. I'll bring that up again in the last slide, folks. We could turn right around and retest yesterday's high. We could gap down tomorrow and then rally back up. It could be a very muddled, choppy rollover. It doesn't have to be beautiful 1, 2, 3. If it is, it's going to make things much easier. So let's get into our sector analysis. Everything that these sectors made over the last few days have been given up, if not all. So what was hit the hardest? Consumer defensive. Now, folks, when I pull these up, and I want to make sure that I tell you every time, sometimes I pull up the consumer staples, discretionary, or well, in this case, the defensive is the staples or the discretionary. This was staples. This was the defensive consumer that I pulled up this time. And you could see it was the biggest loser, down 0.375. Oh, geez, 50-60% of that is Walmart and Target. Energy leading the way to the upside. So let's get into these charts. Here's energy, just a little bit of a pullback. So what's really cool about this, even though the markets have been super volatile, gapping up and being a little bit harder to trade when it comes to the overall pattern, the sectors continue to do what they're doing. The overall markets are pulling back, or I should say breaking down after a bear rally. Well, guess what? The energy sector is pulling back from, this is having a bull pullback because it's above into a new high and so on and so forth. So it's two complete different stories. Now, the consumer, on the other hand, the consumer defensive staples here, was having a hard time. It was consolidating. You'd think that it would also turn around once the markets fell apart, meaning people going back into safety. However, with Walmart, Target, I do think it's going to roll over. I saw Home Depot slipping a little bit. I didn't get to check lows, but it's going to have the sympathy effect, if you guys aren't aware of that, where a couple of stocks in the same sector have a problem, the other ones will start to roll over in anticipation. So I'm seeing that as well. We still have I think we have Ross stores, but they're kind of a retail. I don't know. They're a little bit different. So we'll see. There's a couple more. Cisco Systems, that's another big tech company. But that's a big enough. Those are big enough companies to where if they miss, it'll show what the consumer's mentality is when it comes to the markets, not when they go out and buy. The big difference between retail sales and what we're seeing in market action. So I'm going to chalk this up to mostly those, but it is a big enough detriment to where this is gone. It's broken its upward trend or sideways consolidation. It's now bearish. There's no way around it. So what am I going to do for the rest of this week and into next week? I'm going to pay attention to major support and resistance levels. Right, we've been getting lucky. We've had a beautiful confirmation of a rollover 3 weeks ago. We talked about it. We were right. We got into the bears as we were supposed to. We did good. We were expecting a bounce this week because of Thursday and Friday. We were also talking Wednesday's class and in Thursday of some bulls to buy for that short-term up move. Those are also working. So it's been great, guys. The bulls are doing good. The bears are being great. So I'm going to take a defensive stance and say, look, we might not get that clean bear rally confirmation. Right now we are. Right now it's beautiful. Right now we got a big red candle after 4 days up, huge gaps, no volume, just a shot up. Didn't even get back up to resistance. But I would not be surprised if we get a big red candle today, a big green one tomorrow that doesn't do anything, a gap down doji, so on and so forth. But eventually we break that support level or we turn around and move up higher above that resistance. Keep an eye on the volume and the level, those support resistance levels. Focus more on those. Don't worry about the day-to-day crap. We just saw, folks, that your bulls that are longer term are working and your bears that are longer term are working. Don't get muddled up by the day-to-day stuff. So it could be choppy. However, if it is clean, and you guys saw my outlook, then my -2, -3 outlook is intact. If we continue as low as we are today, that again tomorrow and into Friday, I think that's capitulation. I truly do. Keep an eye on the VIX. I bet you it gets well above the 38 level. So sentiment's bearish. They're missing numbers, cutting estimates. There's not a lot of good news out there when it comes to an investor who wants to put money to work in some of these stocks that have done well. They're coming out and telling you basically not to. Right? All right. So inflation remains the focus. Fed remains hawkish, economic growth flattening. Let's keep an eye on that retail sales level or numbers and the active retail sales guy, because if the consumer can stay active, if the consumer can stay active, then we could get that soft landing. The Fed is not going to take their foot off that accelerator at all. He said as much, and he said it's going to hurt. But if we can stay not in the stock markets, understand the stock market is not a reflection of the economy. The stock market's its own thing. If consumers are pulling money out of the stock market to continue to go out to eat, buy goods, then we're going to get that nice soft landing. All right, there's my soapbox for the day. Let's get out to the markets and see what you guys are looking at. Well, since I've been talking, I think markets are getting depressed. Now, I'm not that depressing, am I? I don't want to be that pessimistic. I'm just seeing a lot of stuff out there that doesn't relate to, I don't know. I think there's still more to be taken out of these markets, and so we'll see if that continues. All right, let me jump into some of the trades you guys are looking at. Not very much. I understand. This is kind of an interesting day, and if you're in a situation where your portfolio is nicely balanced and all your bulls are going up and your bears are going down, I don't blame you that you don't want to add anything here if you don't have to. So that's fine. But for those of you that do, let's take a look at some of these things. So Dan says, hey, chart pattern wise on the SPY, very nicely, confirmed very nicely at the top side of a channel line between the 21st of April, the 4th of May, and the 17th of May. I'll see what I can do as far as it comes to drawing those lines. But maybe up in there, 4th of May, somewhere, maybe this is the channel you're talking about, between the 430 and 410. Let me keep reading. Confirmed down perfectly today for the next leg of selling, 38. Oh, here we got a trade. It's a butterfly spread. Okay, let's take a look at it. I'm going to zoom in a little bit. But yes, I agree. There's these channels that these markets will make, and it's funny because we use them to analyze everything else. There's a lot of times that these are very prime to trade, and this might be one of them. So let me zoom in a little bit, and then I'll get back to. There we go. All right, your trade. So Dan's thinking about a 30, 382, 380, 378. Ooh, that's going to be tough. 382, because these are going to be really tight. 380, 378. Okay, so he's doing a targeted butterfly. You guys can see here, yes, folks, with the little 3 stripes. Well, now there's more than 3. Represent a butterfly. And I think the idea was maybe the projections here of either the short term or maybe this longer term. Yeah. Okay. Okay. Now check this out, folks. Did you see you got that for 2 cents, Dan? Wow. All right. So there's your risk reward. There's your risk reward. What is the expiration on that, if you don't mind? Unless it's right in front of me and I'm not reading it. Sorry if I'm not, but go ahead and type that in. But I like that. Projection of a rollover. And once again, guys, this is why I have my -2 outlook, -3 on the overall markets. That's a gap down. That's a big red candle. I do need to see, sorry, let me get rid of the drawings. I do need to see where this volume finishes. And at least this, at least above the last few days. If it's somewhere up in this area, well, then I think we've started our capitulation move to the downside. It could work. Thanks, Dan. Dan said that those expiration on that is the 17th of June. So he's going out a little bit. He's going out a little bit there just to make sure. Now, folks, a lot of the butterfly traders out there love to take those things once they hit the target. So I imagine for 2 cents, you're doing more than 1 by 2 by 1. Thanks, Dan. Okay, cool. All right, so bearish outlook. He's got the longer term play on it. Just going to take some profits if it flushes out. I like it. All right, Justin has a trade on UPS. I do believe that Corey talked about FedEx yesterday. I thought it was a better chart than most. Oh, wow. Geez, this is great. 175, 170 bear put spread. June 3rd expiration. I'm just going to try to draw it here. Don't have to zoom in. Oh, yeah, he's right at the money, out of the money. He's going to have good risk reward. These are difficult to do, folks, as they're starting to fall like this. So it's cool to understand that momentum, maybe do an at the money and then out of the money is your target. You're going to get a much better risk reward. It's tough because let's say we go slightly in the money and slightly out of the money. The premium is going to be so inflated because of the move today and the breakdown that your risk reward isn't really there. This is a great way to take advantage of both the momentum and the direction and get yourself the best bang for the buck when it comes to the spread itself. Cool. I like it. Thanks, Dan. Let me write this down. Spend UPS. I'm also going to put SPY down as a bear. I like that trade, Dan. What's cool about the spiders, guys? There's enough strike prices and there's enough expiration cycles that you don't have to be as aggressive as Dan. You could do something a little bit less. You could do something more. It doesn't matter. But the chart's set up for it. All right, we're looking at Justin's also got AA. Waiting for confirmation of the bear rally on Alcoa. Boy, it's right there, isn't it? It's another great trade. There's worries you might find here, but it looks like it's probably going to roll through it. Nice little clean target here at 52 and a half. I can 53-ish. Okay, let's put that up. We are starting to see a lot of these safety stocks slip. Aluminum, basic materials, is usually a flight to safety, and it has been sliding a little bit, which can reinforce the worries of lower demand, meaning if we do see a slowdown in building cars and building houses and whatever it is, then yeah, everything's going to get hurt. It's the only way to actually bring the cost of the materials down is to lower that demand. So we'll see. All right, let's go to VTRS. Joe's got broke over 1130 today. Little emerger, right? Nice channel breakout. Good move. Probably surging on some sort of news. We'll see how well it confirms today. Target of 12, diagonal call. I like the diagonal call because the diagonal call could absorb this if it does want to pull back or even consolidate. Good choice of, well, in my opinion, great choice of strategy there, Joe. 12 diagonal call, buy the 11 for June 10th and sell June 3rd at 12. So you're doing it pretty tight. That's all right. No, that's fine. That's great. Just in case it shoots up there, you're out. But if it's going to keep this momentum, then you're going to be happy you kept those tight. But if it starts to slow down and trade more like this, if you guys can see that, just kind of squint down. Where it's just tighter, it's not really making the ranges that you'd expect. Then it's okay to have it a little bit further apart. All right, good. Yeah, so you should probably look into just do one. However, if you wanted to go further out in June, then you could probably sell the 12. And if it stays here, sell the 12 again. It stays here. Just depends on your approach. However, the best bang for the buck would be the closer weeks. So I like it. Thanks, Joe. All right, considering a bull on, is that AT&T? I haven't looked at these guys for a while. How have they been doing, AT&T? And wow, what do you know? Interesting, climbing out of the hole. Sorry, folks. Let's just go on a little. Let's just go down the rabbit hole here. Verizon. All right. Oof, not nearly as good. What's T-Mobile's ticker symbol here, guys? I can't think of it right now. But anyways, let's get back to AT&T. 23, 25, 27. Oh, thanks, Joe. TMUS. Sorry, guys. You get one of those brain farts. You put enough ticker symbols, you go ticker symbol blind. So it's consolidating. That's hilarious. Verizon looks awful. T-Mobile looks great, T-Mobile looks sideways, and AT&T looks good. Funny. All right, let's take a look at it. 23, 25, 27 is what Dan's looking for. Are we really that high? Wow, butterfly up or something towards the 25 range. Yeah, he's going up there. Oh, sorry, 22 range. So 22. Okay. Yeah, I could see that. 21, 22, 23. Sure. Yeah. If it could get its head above that 21, I don't see why it couldn't revisit some of these areas. Guys, I only give you a few months to look at here. If you want to go further back or go to the weekly, please feel free. Let's go ahead and put AT&T down as a bull since we don't have any. Thanks, Dan, for cleaning that up for me. Awesome. So let's go to the day. Here we are. Looks like the markets just want to roll over. They're falling apart. That's fine. Capitulation is going to come. The sooner it comes, the better. It's going to give us more opportunity, not only to hit the cash register, but to look for that first bounce. After a capitulation move where everybody's thrown in the towel, you'll also get false bounces. I'll remember it was about a month and a half rally off the bottom, maybe 2 months on the dot-com bubble burst that I just said, oh, thank goodness I can get back into NVIDIA at $216 a share instead of $500 or whatever it was. Maybe it even wasn't in NVIDIA, apologize. But it was a false move. It was after capitulation. Everybody had flushed out. The world was ending. It was over. And it took 2 months. And then it rolled over again and went even lower for the next couple of months. So it can happen. So I'm waiting for the first capitulation, the panic sell-off. Then we can play a longer-term bear rally, which could be a few months. But we need the capitulation first. Based on where we're at today, it could happen. All right, folks, let me type in the trades that we looked at. Not too many today. That's fine. I understand. These are a rough market. Pretty rough market when it comes to trying to add new trades. A lot of traders talk to me about, hey, Joe, am I chasing these bears? Or am I too early to get into this bull? And sometimes the answer is yes. It just depends on the chart. So it's one of these things that if you're not already in it, you're going to feel like you're chasing. However, focus on the levels, focus on support, focus on resistance, because they can give you another opportunity to get into a bull or a bear when they do consolidate and stuff like that. All right. Here is our small list, our short list. We'll just add it to the winners that we've already got going. AT&T to the upside, and then a couple to the bear. One of my favorites, though, is that SPY trade. If the markets do capitulate and roll over in the next 2-3 days into next week, could be substantial. All right, guys. Thank you. Awesome. Fun class. Thanks for the participation as always. Thanks for joining me. And we'll talk next time. See you guys.